Good evening, everyone. I'm Jerry D'Ambrosio. Welcome to this week's special presentation, Combining Indicators for Optimal Stock Selection. A well-defined trading plan outlines your criteria for when to buy, what to buy, and when to sell. By carefully choosing stocks that align with your strategy, you enhance returns and ensure your plan remains on track for long-term success. Tonight, we're going to dive into that second piece, what to buy, and we'll piggyback off Angela Akers' essay from last week. So here we are in the VectorVest views. I'm just going to scroll us down a little bit to last week's essay. You can see the date, August 30th. Title of the essay was Be Exceptional. Angela writes about NVIDIA's recent earnings report and how they had a fantastic quarter, but their forward expectation was a little bit weak, caused the stock to sell off. Market didn't sell off all that much though on that day, which was surprising, but the stock did sell off quite a bit, hasn't really recovered since. She then goes on to talk about a watch list that she created called AI Stocks and ETFs. She wrote an essay back on February 3rd, 2023. She introduced this watch list back then and ran some quick tests of the top stocks in that watch list, sorted by some of VectorVest's proprietary indicators. And you can see the charts that she built here for those quick tests. So she just reminded everyone, these are the results as of February 3rd of 2023. Again, that was the date that she wrote the essay. All solid returns here. Great winning percentage across the board. Biggest winner here looks like it was GRT, 10 winners, 0 losers, 33% gain. She updated the results with her original start date of January 9th of 2023. Fantastic results, and this is coming all the way to the close of last Thursday. Keep that in mind because I'm going to show some tests here in a moment ending on that day as well, just to compare apples to apples so we don't have different results. So VST up 41%. RS was the biggest winner during this time frame, again January 9th of 2023 to the close of last Thursday. She then ran two more sets of quick tests, year over year and then year to date as well. So the year over year results are from August 29th of 2023. Fantastic results here. You'll notice that no run lost money. Every run here made money over these respective time periods, except for, of course, RT as of December 29th, 2023. RT down 18%, but pretty solid returns across the board. And she ends with, and this is really what led us to put together today's presentation, she says, use the indicators alone or in concert with each other based on your risk tolerance to help you make better investment decisions. And that's what we're going to do here tonight. We're going to combine some of VectorVest stock analysis indicators to enhance returns. So I'm going to move us into the Unisearch tool. I'm going to refer back to this essay a few times as we go, but I'm going to go up to the Unisearch tool. And the first thing I'm going to do is just change the date back to December 29th of 2023 so that we can see some performance here year to date. That'll be our start date. I do have to create a one-line parameter here. So the watch list that I'm going to focus on first is that AI stocks and ETFs watch list. Now we can go into the watch list viewer and do this. I like to do it in Unisearch just in case I want to add any parameters to my scan. But we do have to first build a one-line parameter, one line of code, simply looking at that AI stocks and ETFs watch list. So follow along with me. Under parameter, I'm going to go stocks, filter by, select watch list. The watch list is going to equal, and then the value is going to be in the overview watch list. And it's going to be that AI stocks and ETFs watch list. That's the only watch list that I want to look at. So I check that box, click on OK. And when I run that scan, as of December 29, 2023, here are the top VST stocks in that watch list. And if I go ahead and quick test them, again, and the end date I'm going to set here as August 29th of 2024. That was last Thursday. 17.5% gain, 17.52 specifically. 6 winners, 4 losers. Outperformed the market quite a bit. The VectorVest composite over this time period only went up about 11%. So just to review, go back to that essay, 17.52%, 6 winners, 4 losers based on that VST sort. So of course, we're just looking at a single sort here, but what if we wanted to combine some of these indicators? For example, what if we wanted to look for stocks and bring to the top of the list stocks with the best combination of VST and CI? CI is a fantastic indicator. It's a VectorVest proprietary indicator, looks at the long-term price history of a stock, and it's on a 0 to 2 scale. When the indicator is above 1, that's good, below 1 is bad, and the higher the number, the more persistent price has grown long-term. When you look at a high CI stock, you're going to go look at stocks from bottom left to upper right. Really nice, smooth, persistently growing price. So what if we wanted to find stocks with the best combination of VST and CI, but that aren't in the strongest uptrends yet, right? So we're looking for a good quality stock. High VST score means the stock has the really solid combination of value, safety, and timing. You combine that with CI, and we just explained what CI was. Price growth persistence over time. So it's more of a technical indicator, not looking at fundamentals at all. If I want to look for companies and stocks that have the best combination of those two indicators but aren't in the strongest uptrends yet, I would divide that by relative timing. And if I click on this little scan that I created here, just simply looking at that watch list, but with a sort of VST times CI divided by RT. Now let me say this. This is not the end-all be-all of sorts. My intent here tonight is to get you guys thinking of different ways to combine indicators so that if you're looking at a watch list or you're looking at a scan, you now know how to change the sort, how to combine indicators. What does it actually mean when I multiply two indicators together and then divide them? So if you multiply two indicators together, you're looking for the best combination of both of those indicators, and then when you divide, you're looking for a larger number on the left, a smaller number on the right. So best combination of VST times CI, I want that number large, and divided by RT, meaning I'm looking for stocks that have a relatively low RT score, more of a bottom fishing type sort. Bottom fishing sort for AI stocks and ETFs that are fundamentally sound and that grow in price persistently over time. That's what this sort is looking for. So if I go ahead and run that search as of December 29, 2023, here's our list. A lot of the same familiar names that we're used to: NVIDIA, Meta, Salesforce, Palantir, back at $17.17, Amazon, Google, Oracle, Microsoft, and Workday. If I quick test those, solid returns, 34%, 34.5%, 8 winners, 2 very small losers. You can see it picked up Palantir at $17.17, and as of last Thursday, closed at $31. Nice 81% return there. The VST sort was good, 17.5%, but combining the power and the efficacy of these indicators, I think we can enhance returns time and time again. So let's try that. Let's look at some of the time frames that Angela wrote about in her essay last week. So 34% solid. We know it outperformed the VST sort. How did it do against the other ones? It actually came in first. You could see CI was up 32%, just again, CI alone up 32%. RS up 22%. So first place here in terms of the performance of just the single sort indicators. Let's go back to August 29th of 2023. I'll take my date here back to August 29th. Run the scan. Here were the results as of August 29th. So good combination of VST times CI, but the RT scores, you can see the RT scores not very high. Some of them actually below 1. If I go ahead and quick test those, 8 winners, 2 losers, up 26%. Okay, so a couple of big losers in here. AI lost 25%, MBLY lost 60%. You're not going to let these losers get away from you like that. This is just a baseline, point A to point B. Proper risk management guidelines need to be applied moving forward, of course. But this is just giving us a nice baseline on how well This list of stocks performed over this time period. And if I go back to the views, go back to that August 29th date, kept pace with some of the better performers. Didn't outperform the CI or RS or even RT, but did perform pretty well there over that time period. Okay, let's go back. February 3rd of 2023. We're going to run that test. Here was the list of stocks on that day. Quick test the top 10. Not bad, 27%. You got a couple of losers in here that you'll cut loose before they run away from you like these did. But 27% gain over that time period, 17% annualized rate of return, outperformed the market once again. So pretty good results there. And if I go back to that last date or the original quick test start date of January 9th, 2023, run that search. Here are the results. Quick test, fantastic. 65% winners. Found CrowdStrike back when it was at 96 bucks. Lit, 39% loser. Again, you're going to cut that loose before it runs away from you. So 65% gain over that time period, January 9th to August 29th of 2024. If I go back to the views, outperforming all but two of the single sort quick tests that Angela had originally run. So what I would suggest for you to do is build a table. Do like Angela did. Build a table of some of the results using different combinations of sorts, different combinations of indicators. So VST times CI divided by RT, just generally speaking, it's a very good sort. Again, the logic behind it is you're looking for the best combination of VST and CI, so you know what type of stock you're going to get when you combine those two indicators. But you're finding them before they really make a strong move. So generally you want that RT score to be below 1, and when you divide two indicators like that, that's what you're looking for. For example, just simple VST divided by RT. I want a high VST score, but a relatively low RT score. Again, a really good bottom fishing sort. Now, one of the things, though, that we're not including in this sort or even in the scan is volume. I think volume is extremely important. You could see that a couple of these don't trade all that much. AMON, I mean, that trades only 1,200 shares on average. Lit trades about 522,000 shares on average. So if we wanted to incorporate volume into this scan, we could put a minimum volume criteria here, looking for stocks maybe that are trade over 1 million shares, but I like to include it in the sort. So here, same one line parameter, same pond that we're fishing in, but the sort is different. VST times CI times average volume. Again, what does that mean? We want the best combination of VST, CI, and average volume. So it really includes or incorporates liquidity, and we want the most actively traded stocks brought to the top of the list. We still want those stocks to have a relatively low RT score. So if I run that search, let's go to our year-to-date start date there of December 29th. Run that scan. If I just scroll over to the right, look at the average volume. It eliminates all of those thinly traded stocks, right? Lit and a few of the other ones. You found Micron here too at the beginning of the year. If I run the quick test, 33%. 9 winners, 1 loser. Tesla only down about 17%. So run through the same exercise. Go back August 29th, 2023. Run that scan. Quick test, 39%. VVC only went up about 17%, so we doubled the performance of the market. And again, refer back to Angela's essay. You can see that this is on par, or if not better, than just the single indicator sorts. Let's go back to February 3rd, 2023. Run the scan. Quick test the top 10. 125%. 10 winners, no losers. Again, found Micron, found Palantir really early there. And 125% from February 3rd of 2023. If I go back to the views, look at that February 3rd, 2023 date. blew all of the other quick tests out of the water there. And then finally on January 9th, got a big winner here, 139%. Let's see if we can't beat that. So if I take the date back to January 9th, run the scan, there were the results, quick test them, 189%. So fantastic sort here. VST times CI times average volume divided by RT. And you can apply this exercise on any list of stocks. So I know the pond is small. We're only looking at the watch list titled AI stocks and ETFs. You can do this on any watch list. So if you wanted to look at the S&P 500, for example. So instead of the AI stocks and ETFs, I'll click on that. I'll uncheck AI stocks and ETFs. I'll go to the S&P 500 watch list, click on it, run the scan. You have potentially a different list of stocks, but the sort is the same. Now we're looking at 500 stocks. Quick test the top 10, 104% gain there. What else did it find besides the find AMD, Bank of America, ExxonMobil, good returns there. If I go back to our year to date, December 29th, 2023, run that test. Quick test the results, not bad, 12%. Big loser there, Intel down 60%, not going to let that happen. But the way a list of stocks is ranked is so important to your stock selection process. You know, when you're running a scan or when you're looking at a list, the advantage that you have with VectorVest is that it is sorted and ranked in a very specific manner. Generally by VST, or you can sort by CI, or again, the way Angela detailed it in her essay last week, sorting by single indicators, single VectorVest proprietary indicators. But today I wanted to supercharge that a little bit and show you how you can take these indicators, combine them into a really dynamic sort to bring different stocks to the top of the list to, again, hopefully enhance returns over the long run. The next step, though, quick tests are not enough. The next step is to use the back tester, start incorporating market timing, money management rules to this stock selection process. And that's really the last component of our trading plan, right? When to sell. That should be done after you get a nice baseline of, hey, this list of stocks or this methodology has performed well from certain points in time, just simply buying and holding. Let's see if we can't make it better and build a trading plan incorporating some money management rules. Now, I know you saw me apply these indicators to the scan, but you have to build them first. Let me show you how to do that. So some of these indicators or some of these sorts aren't pre-built into the VectorVest program. I'm not sure if VST times CI divided by RT is in there. I'm not sure if VST times CI times average volume divided by RT is in there as well. We have a ton of different sorts, but I'm going to walk you guys through building both of these. So if I go to Tools, the way you're going to build these custom fields is go to the Custom Field Builder. Just kind of write it out. So I'm going to go to Fields here, go Capital Appreciation, start with VST. I'm going to multiply that. Click on the little multiplication symbol here. Go back to Fields, Capital Appreciation, CI. I'm going to divide that. It's pretty intuitive. Go to Fields, Capital Appreciation, RT. There's your custom field. Make sure you validate it before you go to save it. If the expression isn't valid, it will let you know. So if I click on Validate, it says the custom field validated successfully. Great. Click OK. And then click on Save Changes, and then the custom field saved successfully. So that now, click on Exit here. When I go up to the top to change the sort, it'll be in my list. So VST times CI divided by RT. It is in alphabetical order, so you'll see it there. Just simply click on it. Then click on OK, and that will apply that sort. And just quickly, go back to Tools, Custom Field Builder, go to Fields, Capital Appreciation, VST, times CI, times average volume. And that's in the volume section. Click on average volume, divide that by relative timing. Make sure the expression is validated. It is. Click OK, and then click on Save Changes. Well, thank you guys for joining me here today. Don't forget, we have our weekly market update on Tuesday. Mr. Rick Franklin will answer any questions that you guys have about this week's special presentation. You can give our support department a call or email us as well if you have any questions. Have a great weekend, everybody. See you next week.
Yeah.